Pantheon AI presents PAI Morning Briefing, April 21st, 2025. Welcome back to the PAI Morning Briefing. I'm your host from Pantheon AI, and it's a pleasure to have you with me today, April 21st, 2025.
And I'm host B, ready to unpack the latest happenings impacting our markets, the global economy, and really the sectors that drive our everyday financial decisions. Always a lot going on, isn't there?
Absolutely. So let's dive right in with a quick market overview. Looking at U.S. equities, the S&P 500 is sitting right around 5,230.7.
Okay, 5230.7. And how's it moving?
Well, it's actually seen a slight negative change today, down about 0.0428%. So holding relatively steady, but just ticking down a little.
Got it, steady with a tiny dip. What about the Dow Jones Industrial Average?
The Dow's trading around 38,849.57. It's seen a slightly larger dip today, down roughly 0.145%.
Okay, so a bit more caution reflected there. It feels like that uncertainty we've been talking about is just keeping things a little subdued in traditional markets.
Exactly. But if you're watching the digital asset space, it's a completely different story today.
Oh? Do tell.
Bitcoin, the perennial favorite, is trading around 87,195.789. And it's enjoying some positive momentum, up about 2.378%.
Wow. Over 87K for Bitcoin and a solid gain. That's interesting given the equity dips. How's Ethereum doing?
Ethereum isn't far behind. It's trading at approximately 1,626.2347, up by about 2.45%.
So, while traditional indices are hesitant, crypto is surging. There's that contrast we always see, right? Makes analyzing the market a real puzzle.
It really does. And it makes you dig a little deeper into the trends. What we're seeing is a market balancing between economic optimism and geopolitical apprehension.
Right. Minor declines in the S&P and Dow suggest institutions are still conservative.
Exactly. But the gains in digital assets, that could signal a shift. Maybe a flight to alternatives when traditional markets get the jitters.
Yeah, I've heard that theory, investors looking beyond conventional boundaries for yield. With equities facing headwinds from domestic and global pressures, maybe Bitcoin and Ethereum's performance means increasing appetite for assets not tied directly to the physical economy?
That's one possible explanation. It's a fascinating dynamic. Can this trend continue? Or is it just a temporary reaction? And what does it say about the risk appetite out there right now?
Big questions. Speaking of risk and global policy shifts, the news cycle this morning has been packed.
It really has. Let's walk through some key stories. First up, the foreign exchange market, specifically the EUR-USD pair.
Oh yeah, I saw something about that. It's broken higher?
It has. Reports say it's traded at its highest level since November 2021. The US dollar has been under pressure, down about 1.35% against the euro.
Wow, over 1.3% is significant for a currency pair. And this is happening alongside falling US equities and bond prices?
Precisely. The surge past its previous resistance zone between 1.1482 and 1.15158 signals a real pivot. It implies global investors might be reassessing their currency preferences, possibly moving more towards the euro.
That could have long-term implications for trade and international investment flows. Big move to watch.
Definitely. Next, we've got some lively commentary from Jim Cramer.
Jim Cramer. Always entertaining.
He unveiled his top 10 things to watch for Monday. According to him, Wall Street's bracing for a lower open.
Okay, aligns with the futures we're seeing.
Right, and there's been a particular buzz about Tesla. Wedbush is warning it might be facing a quote, code red situation.
Code red? That sounds intense. If you're a Tesla investor, you've got to feel a mix of excitement and trepidation hearing that.
Totally. Jim's list reminds us that keeping an eye on these details can be crucial. Even the blue chips have their moments of drama.
Yeah, you almost wonder if the market itself has its own top 10 things to watch list behind the scenes.
Ha! Good point. And speaking of Tesla, there's another story focusing on the EV giant. The headline is intriguing. Tesla earnings could offer hope for the stock, but this has to happen first.
Hey, investors are on the edge of their seats waiting for earnings. What has to happen?
They need reassurance on sales performance and clarity on future projects like robotaxis and potentially a cheaper vehicle.
Right, especially in today's price-sensitive market. It's more than just earnings. It's about the future of mobility and how disruptive tech redefines industries.
Exactly. High stakes, high potential reward with Tesla. Classic, expect the unexpected.
Adds to the mixed signals we're seeing. And speaking of mixed signals, U.S. stock futures are trading lower this morning after another tumultuous, albeit holiday-shortened, week.
Yeah, that downward trend isn't entirely unexpected given the overall caution. It really muddies the waters for today's open.
Definitely. That cautious sentiment, combined with domestic and global pressures, means meticulous planning is needed.
On the macroeconomic front, Chicago Federal Reserve President Austan Goolsbee has weighed in.
What's his take?
He's warning that U.S. economic activity might appear artificially high before it slumps this summer.
Artificially high? Why does he think that?
He believes businesses and consumers are stocking up now because they face impending tariffs from the Trump administration.
Ah, a pre-tariff bump. So that temporary spike could lead to a slowdown later?
That's his view. It's a cautionary note, urging us to watch both the short-term spikes and the longer-term trends.
Interesting perspective. And speaking of tariffs, another story caught my eye across the Pacific.
The Alaska Energy Project?
Exactly. Trump tariffs are reportedly prompting Asian trade partners to consider investing in this massive project.
Right. A pipeline, a gas processing facility, and a plant to liquefy gas for export. The estimated cost is around $42 billion.
$42 billion? That's huge. It really shows how global trade policies and tariffs can ripple through industries and drive investment in large-scale infrastructure.
It does. It could transform the energy landscape in that region and potentially affect global energy prices.
And the anxiety around tariffs isn't just impacting energy. There's growing anxiety in bonds and stocks, too.
Absolutely. Some analysts warn that the world's deepest bond market is vulnerable to aggressive sell-offs.
That's a serious concern. Turbulent conditions in bonds could trigger broader systemic shifts. It's not just for bond traders. It's a wake-up call for anyone in the financial ecosystem.
It really is. And adding to that, another economist has raised the alarm, suggesting a 90% chance of a recession unless tariff policies are reevaluated.
90%? Wow. A voluntary trade reset recession. That sounds almost paradoxical.
It does, but it's a stark reminder of the delicate balance. Are we prepared for the economic consequences if current tariff trends continue unabated? It's got investors and policymakers on edge.
Definitely thought-provoking. Shifting gears a little, we have some corporate updates.
Yes, PX Energy, a vertically integrated refinery and mining operation in southern Brazil, plans to go public.
Through a business combination with Papaya Growth Opportunity Corporation 1, right?
That's the one. And they've got a committed investment of $10 million backing the move. Their expansion plans and vertical integration could be significant for the energy and mining sectors in Brazil.
An exciting development for those interested in emerging markets. And on the consumer goods corporate front, a rather upbeat anecdote from the CEO of Back Market.
Oh, I love this story. Sales at the refurbished electronics retailer tripled in just 1 week when Trump tariffs took effect.
Tripled? That's incredible! He thinks Americans have a big opportunity to change how they buy tech manufactured in China.
Exactly. It's that classic twist. Tariffs, often seen as a drag, created the conditions for this company to shine. The irony is definitely there.
It gives you a little chuckle, doesn't it? How market conditions can turn challenges into unexpected opportunities.
It really does. Okay, let's break down how these stories are impacting key sectors. Starting with technology.
Right. Tesla's earnings and future projects are central here. The EV sector is so much more than just cars now. It's about transforming transportation.
Absolutely. Investor sentiment is oscillating, so tech continues to show both volatility and immense potential. Sometimes it feels like the tech world is a stand-up comedian. You never know when it's going to hit you with an unexpected punchline that changes the whole atmosphere.
Haha, that's a good way to put it. In energy, that massive Alaska project is reshaping the conversation about global supplies.
$42 billion. That's not small scale. It's a statement that traditional energy infrastructure is still very much in the game, even while we talk about renewable transitions.
And PX Energy going public in Brazil shows dynamism in emerging energy markets. Energy is just at the nexus of everything these days.
It really is. And in finance, both traditional equities and the bond market, tariff uncertainties and economic forecasts are playing a huge role.
The mixed signals from futures, Goolsby's cautionary notes. Some markets are optimistic, others are bracing for downturns.
Right, and the possibility of aggressive bond sell-offs adds another layer of complexity. It underscores how interconnected our financial system is. A tremor in one area can send ripples everywhere.
Definitely. Widening our scope to global market implications, that EUR-USD upward movement isn't just a domestic currency story.
No, it reflects shifting global preferences and evolving risk perception. A weaker dollar against the euro could mean new alignments in international trade and funding flows.
Couple that with the Alaska Energy Project rooted in Asian investments. Political decisions like tariffs have far-reaching consequences globally.
Experts are even predicting a reinforcement in regional blocs as countries seek stability. This isn't just about numbers. It's about real-world impact on industries, jobs, even geopolitics.
It's heavy stuff. But like you said, maybe a little levity helps. It's like the market's balancing act, part tightrope, part high-wire circus, with the occasional gasp-worthy tumble.
Exactly. It reminds you there's an innate human element that keeps things interesting, even when the analysis is data-driven.
Human behavior driving it all. Expert insights are crucial here. Many are urging caution right now.
Yeah, with the volatility and looming tariff disputes, they're recommending balanced portfolios. Some say more defensive stocks and high-quality bonds.
While others see the rising crypto markets as that beacon of opportunity amid macroeconomic concerns.
It's a fascinating debate. Traditional versus innovative. Will diversification hold, or will digital assets redefine strategies?
Take Bitcoin and Ethereum's performance. Their surge could mean alternative assets are becoming more than just a hedge, maybe a core part of diversification?
Could be. And while it sometimes feels like we're in a financial thriller, the premise is serious. We need to consider all options, even outside our comfort zones.
Absolutely. So let's bring this full circle with some questions for our audience. How are the current tariff policies impacting your investment strategy?
And could the rising strength of the euro mean it's time to reassess your exposure to international currencies?
And for those watching Tesla and tech, what factors will determine if they can keep innovating while managing market challenges?
It's an exciting time to be in the markets. The interplay between policy, performance, and behavior creates such a rich tapestry.
Every data point, every headline is a clue. And we at Pantheon AI are committed to unpacking that narrative for you, our informed audience.
Before we wrap up, let's hit the key takeaways. First, traditional indices are down slightly, but digital assets are showing robust gains.
Second, significant currency movements like EUR-USD remind us these challenges and opportunities are global.
Third, corporate earnings potential, like Tesla's, and macroeconomic warnings, like Goolsby's forecast, are shaping sentiment.
And finally, the cascading effects of trade policies, like tariffs, across sectors, from energy projects to consumer trends, underscore the need to stay vigilant and adaptable.
It's been a lively conversation, diving deep into complex narratives with a few lighthearted moments.
Navigating these turbulent but fascinating conditions is definitely part of the adventure of investing. And remember, learning shouldn't feel like a full-time job.
Exactly. Whether you're dissecting policy details or gauging market moods, let Pantheon AI be your information co-pilot. We're here to help you make sense of it and spark those questions that drive smarter decisions.
So, as you step into the day, ask yourself, are current trends a temporary lull or a deeper shift? How will tariffs and global alliances impact your portfolio?
And where do digital assets really fit into the risk and reward picture today? Join us back for our next episode tomorrow.
We're always eager to hear your insights and questions. Reach out to our AI co-pilot. It's your chance to engage directly with the ideas that keep our markets moving.
Thank you for tuning in this morning. Until next time, invest wisely, stay curious, and remember, learning shouldn't feel like a full-time job.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.